Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What's Hot, a show that focuses on the biggest buzz on the D Street. And today we're going to be focusing on all the stocks that are in focus in today's trade. But let's first welcome our guest on board who's joining in right here. Mr. Abhishek Basumallick is joining in from Sri Rama PMS. And warm welcome to you, sir. Thank you so much for taking the time out. Always a pleasure to have you with us as we kickstart this fresh and new week on a strong note. Again, we have 26,115 on the Nifty. And about a 50 points higher, IT, banking stocks, those are the ones that are again taking the lead. Although auto has fallen back in the red right at the open today. Help us understand, how are you looking at the trade setup for the week? We've already made at least 4 attempts in the last couple of weeks to go beyond, the previous record highs, or at least to retest those record highs as well. But every time we have seen some resistance play out at around the same time that we are trading at this point in time. What do you think will it take for the Nifty to further spearhead and yet again move towards that record high, sir?
You and all your viewers. See, I think, the market is trying to get to the new all-time highs, and it's obvious, or it's expected that it will sort of face some resistance. So, it's not, it's the kind of behavior we are seeing is not something that is unexpected. So, I expect volatility to continue, and also with the fact that the US tariff situation is still unclear. We don't know what is happening. Currency, the US dollar spotted on Friday. So overall, it's still the landscape is still fairly uncertain.
Okay. Any particular sectors that you're watching out for already some underlying performance that is being seen at this point in time, and those can actually outperform when the markets actually get into a better spot or a brighter spot?
See, I think banking obviously is beginning to show a lot of strength. My sense also is that once the US tariff deal is done, we will see a lot more of focus back on the export-oriented sector. So stocks or sectors which took a beating, like aquaculture or textiles or other export-oriented sectors, they will again see some interest. I think IT, we are seeing some kind of interest coming back again because of the dollar situation, dollar going up.
Absolutely. In fact, IT also has this entire fillip because we actually saw the rupee depreciating its record low on Friday as well. And, most of the, currency experts also feel that there could be chances that in the near future we could also see the rupee hitting 90. We're just about half mark away from it, in the last Friday session as we saw. We recovered a tad bit because of RBI's intervention, but that seems to be a possibility. Rupee depreciation, could it add on to the appeal of the IT stocks at this point? Of course, like you pointed out, it was the tariff deal impact that was seen as pressurizing this sector, but seems like there are again some signs that we could be probably nearing a US-India trade deal. If that happens, then this sector could further have some positives, and now you have the rupee depreciation too.
See, the rupee figure, or the rupee dollar conversion figure that I am working with is roughly 91.5 to 90. Okay, so that is not immediate, but over the medium to long term, we're working at 91.5 to 92 rupees per dollar. And if that happens, obviously there is going to be benefits that is going to accrue to the IT sector as well as to the overall export-oriented sectors. IT also is seeing some amount of interest because we are, hearing a lot of talk in the US about the AI build-out and whether it's getting into a bubble kind of territory. And people are looking at Indian services-based, IT as something which is sort of an anti-AI play. That this is the bread and butter kind of core services that is always going to be required, and it doesn't depend on a lot of build out and things like that. So that's another aspect or another perspective of looking at Indian IT at this point in time.
Yeah, fair point. Also wanted to ask you on the banking space, since you did say that, this is a space that could continue to perform well. Are you betting big on PSU banks for a change now? Because there is this entire hope that mergers could be speeding up. There could be foreign ownership changes as well. Of course, private banks have led the show so far in 2025. But is PSU bank getting into a sweet spot?
I think PSU banks are getting into a sweet spot, but not, probably more because of the fact that they are, their valuations are much lower compared to most of the private banks. But I think we should not only take the PSU banks, but I think the overall banking looks interesting because we are, probably looking at a rate cut going forward because inflation is very low. If I look at the growth that is being projected is roughly 7.5% depending on what kind of which economist you listen to, but roughly it's between let's say 7%, and we are looking at inflation which is far below the RBI threshold. So it is possible that we will see some kind of a rate cut in the near future. I think the RBI is waiting to see how the US tariff thing plays out and how the currency plays out. So, it's basically right now many things coming together, which is creating this sort of uncertainty and ups and downs in the market. But overall, I think structurally we should be in a good position in the next 6 months to 1 year.
Okay. Abhishek ji, also wanted to ask you, the big key trigger that we are also focusing on is that India ushering a new era of reforms when it comes to the implementation of the labor codes as well. We've also seen some stock reactions today, like Teamlease has jumped about 10 odd percent in trade. Now, major companies have actually welcomed this move. The implementation of the new labor codes will significantly strengthen India's export ecosystem as well as by creating a more flexible, simplified, predictable regulatory environment as well. Reacting to these 4 labor codes, we have seen Eternal, that's the parent company of Zomato, welcoming the implementation. The company said it will help them strengthen the social security for even gig workers, including for both Zomato and Blinkit. We although have seen also Eternal saying that it does not think that the financial impact on account of these rules will be detrimental for too long term health as well. Meanwhile, Amazon has said it is assessing the impact, although they welcome these reforms, they're evaluating the changes that will have to be ushered into. So we'll try and understand that a little bit from you, Abhishek ji. Help us understand what these new labor codes will mean for India's both quick commerce industry, those that are heavily dependent on gig workers, and for the traditional companies.
See, I mean, I've not really gone through in details, but from whatever news reports I've read, there are two aspects to it. One is the focus on simplifying and consolidating a number of labor codes into a few. That is always welcome because India, businesses are plagued by over-regulation and by too many laws. So if the more it's simplified, the easier it is from a compliance perspective, the easier it is to actually do business. So that's the first part. The second part is strengthening labor or payouts to labor. So whether it is gig workers, whether it is gratuity payments after 1 year, etc. I think that is a very welcome move. I mean, at least for the gig workers, because see, what is India's job creation challenge today? We are as a country not able to create a lot of jobs, right? And this is not only a India specific problem, this is a global problem. But in India, we are seeing this as a major challenge because we have so many people who are coming into the labor force every year. Now, a large part of the people who are coming in, especially from the socio-economically challenged households, are getting into gig work. Now, if we are able to facilitate and provide reasonable compensation for them, what ultimately happens is the buying power or the consumption power of people in the lower income households go up. And that, I think, over time is going to be very, very good for not only the overall economy, but also for the stock markets, right? Because we want, as a country, that a large number of people prosper. I think that I think is very, very important. So as and when we are able to pay more reasonably to gig workers and people in the lower strata of society, then of income, it's actually beneficial in the long term for the economy.
Absolutely. But just to understand a little bit, what could be the immediate impact? What we are given to understand now, as per Morgan Stanley's report, is that they're saying platform firms may have added costs of 1.5 to 2.5 rupees per order in food delivery and in quick commerce as well. What will that do immediately to the earnings of these companies? And will this money be immediately passed on as marketplace fee, as has been the trend that we've been noticing for a lot of these companies, Zomato, Swiggy? They've already been raising every quarter, every couple of months, this fee, because now they know that, a lot of people are dependent, and they wouldn't mind, initially it was just 2-3 rupees in early single digits. Now it's double digits, mid double digits, and it could go on to even 20 rupees and maybe 25 rupees, and people wouldn't mind it. So do you think this added on cost will be offset by increasing the marketplace fee soon?
So I remember, we had this discussion maybe a year back when, I was saying that if you look at, say, a Zomato, right, or a Eternal or a Swiggy, the thing is that they have got, especially urban India, hooked onto their service, right? Now, my, the way I am thinking is, the way I expect this to play out is that you will have now tiers. So, for example, Zomato might come out with some kind of a membership plan where they charge you, say, 200 rupees or whatever per month, and then they give you a lower rate per order and things like that, and charge people who are not on the subscription plan something more. So some form of getting that whatever additional cost that they have to bear from the end consumer is something that is inevitable. And it is also inevitable that the entire business of all these quick commerce or e-commerce is going to continue to grow, because one, people are used to it, and two, they definitely do have advantages that they are sort of capitalizing on, in terms of saving on time, a larger choice, things like that. So my expectation is that you will see more creative subscription plans and costing and pricing going up slightly to compensate for this.
Okay, fair point. And when we talk about these new age firms, sir, after the end of Q2, where have you probably analyzed where opportunities can now start to be looked at again, beyond, say, the frontline ones that we always talk about, Zomato and Swiggy? Where else do you find more confidence in the fundamentals of the companies?
Not too much in the new age firms, honestly. But I think if I look at the overall numbers in the last quarter or the quarter just that's gone by, I think a lot of the core sector companies have done well. You look at the cement results, you look at some of the infrastructure companies, you look at engineering companies, they've actually done quite well. So that's, I think, another area where these are the areas which is going to do well over the next bull cycle when we start it, or probably we're just already in it.
Okay, fair point. Apart from this, sir, which are the sectors that you believe one can be looking at the current levels, where valuations is are on a comfortable zone? Where are you finding value in this market, sir?
Finding value is not as easy, as it was a few years back.
Yeah.
I think even after this correction of more than a year, companies which are doing well are not cheap. So that is the conundrum that we face. Companies that are doing well are fairly priced or expensive, and companies which are not doing well probably are available cheap. So you have to take your call whether you want to buy slightly expensive companies which are doing well versus companies which are not doing well and available cheap. So if I look at sectorally, sectors like power, sectors like defense, shipping, ports, engineering, manufacturing, chemicals, fertilizers, cement, these look quite good.
Okay. Let me also ask you on the capital markets related stocks as well. There has been a lot of interest from investors always in this space, and the space seems to be coming back into focus. Of course, last week we've had Grow, and that brought the attention a lot to the entire pack as well. We have BSE that finally, after a long haul of consolidation, has started to move up. It's already sprinted about 15% in the last month, and it's just sitting about 5-6% below its record levels again. So, just wanted to gauge your understanding of how are you approaching the capital market story.
I think, I was just reading, some data points and from SEBI. I think 2014-15, there were about 1 crore unique investors, unique PAN numbers in India, and today that has grown to 12 crores. Now, that's what has happened in the last 10 years, right? So a 10-12x jump. And the report said that we are expecting a significant jump forward in the next 10 years. So even if it is not 10x from here, which is probably not possible, but even if that 12 crores goes up to 20 crores in the next 5 years, 7 years, that means that the opportunity size of investments is of in companies which are in this investment space is humongous. You couple that with the challenge that banks are facing in getting their CASA up.
Yeah.
Right? We are listening to all the management talk from all the banks, and they are struggling with savings accounts and fixed deposits and current accounts. And one of the main reasons for that is that most of the savings, household savings, is getting channelized to the stock markets through mutual funds, through direct equity, through IPOs. So that's a very large trend shift that we are seeing, and I don't see that shift to be changing. So if that continues to hold, then most of these companies which are associated with the capital markets should be doing that.
Absolutely. And when we talk about the large caps, the largest listed stock by market value comes to focus, Reliance Industries, particularly because, since 2020, the COVID year, I think Reliance is now on course to post its biggest bull run on a year. It's already up by about 26% in 2025, largely pulled up in the last couple of months only. It's already added about 4.5 lakh crore rupees to its market cap as well. And it now, is important to understand what's fueling this bull run and what do we expect going forward from here as well. Abhishek ji for Reliance Industries, 1541.
So I think the biggest trigger for Reliance right now is their telecom business.
Yeah.
That's doing really well, and also in the last few quarters, I think the refining part has also been doing well.
Yes.
Geo Finance, again, that's something which is which is also picking up. So the entire Reliance ecosystem, things are beginning to pick up. They've invested very very heavily in Reliance Retail. At some point in time, it will also start giving back cash flows to the parent company. And so overall, I think with telecom doing well, with retail beginning to pick up with probably these GST cuts, etc., I think the sentiment is now in favor of Reliance, at least for the short term.
Absolutely. All right, Mr. Basumallick, thank you so much then for being with us on the morning edition of What's Hot, and hope you have a fantastic time. We'll get you back soon on another edition of Markets Today to get an understanding on the markets and where the money truly is flowing. Thank you so much.
Thank you.
All right, viewers, let's look at wrapping this What's Hot edition with markets wrap 26,126, a 58-point offer jump that you're seeing. IT stocks definitely spearheading the kind of move that we are seeing. PSU banks and the Nifty bank follows, private banks, financial services. So IT and banks, clearly, those are the two pockets that are supporting this move. On the Nifty, you have Tech Mahindra, you have Shriram Finance, Eicher Motors, Infosys, Bajaj Auto, Wipro, Dr. Reddy's, that's also pulling up. So IT, banks, auto among the top movers as far as the Nifty is concerned. On the downside, you have, however, BEL, Tata Motors, Trent, Grasim, M&M, Ultratech Cement and Coal India is among those stocks that are still declining in trade. Right, we'll wrap it up here, but do stay tuned as market coverage continues on the other side. And in case you have any questions regarding the stocks in your portfolio, ask them away on daily calls at 12 noon.